Let's get the latest. Evan Lucas from IG in Melbourne. Yeah, Evan, just give us your thoughts on what was dragging on US stocks.
Yeah, at the moment it's a very interesting sort of time going on over the US. I know everybody's talking about the fact that this is their 5th straight south print in a row, but if you actually have a look at it, it's only a 2% correction, and that's the lowest correction we've seen since mid-2007, so it's not exactly a huge move. It is obviously a little bit concerning, and it is been going on basically since the taper talk sort of got about. We obviously had 2 hours of trading in the US when taper was actually held at current lines, and ever since then, with the next day, they've been going backwards ever since. We also know about the debt ceiling, and there's a lot of debate now going around there in the political sphere rather than probably in the economic and the market world sphere about what happens come sort of roughly October 17. They do have to get along with it by probably this time by Monday. They obviously then have a possibility of a technical default with a government shutdown on Tuesday, but the actual debt limit expires on the October 17, and there are political calls out there that they may even see President Obama himself having to step in and actually raise the debt ceiling on his own. The reason they suggest he can do that apparently is the 14th Amendment, which has an act in there that says that the public debt shall not be questioned, and that's a very, very interesting interpretation. Some of the old presidents, including Bill Clinton himself, has said that the president should actually do this. Then there are some major major Supreme Court judges out there saying that he can't do it because it means that it opens a tap to something that can't be realistically turned off. So very, very interesting times, and why there's a lot of nervousness out there as well. But you've also got to look at the moment, the markets look like they're probably at fair value, and that's what you can see on the graphs. Every time they've broken out, they're coming back into a very, very small V, and for that reason, it would also suggest that investors are currently happy with the levels that we're at. So it's a very, very interesting time on the markets over in the US, and it is causing volatility across the globe, and for that reason, trade tends to be, at the moment, a little bit soft, and that comes back to what we're seeing out of the data as well. Core durable goods last night were quite soft as well, and that's all why at the moment it's culminating as red on screen.
200 though, I mean, we were on track for what we thought was going to be a flat, slightly negative open, yet in the end closed 0.8% higher. What are the drivers of the ASX 200 over the last 24 hours, do you think?
Yeah, it's been a very interesting time, and you've got to look at the major drivers have been the banks, particularly NAB. NAB's had an unbelievable run over the last 24 hours. At one stage yesterday was up 1.6%, and you've got to look at what's behind that. They are the backbone of the ASX at the moment. They make up roughly 27% of the entire market if you combine all 4 of their market caps together. People are speaking about real interest rates. Look, the 10-year bond in the Aussie 10-year bond fell another 2 bips yesterday to 3.87%. That is a very low margin considering what we normally trade on, and also if you look at the US 10-year Treasury yields, they're now down to 2007 numbers as well at 2.85%, 2.65%, and that's roughly around about a 45 basis point drop since they got to the top before tapering came about. All of that's very, very positive for yield plays. Although the banks have not got the same yield they were offering you probably around about 18, 24 months ago, it is still quite attractive if you look up on a gross yield perspective. Other news that was coming out yesterday that is certainly a possible driver is there is an unusually large amount of demand coming from US real money funds. Now, they're the custodial funds. There was reports coming out of the institutions that there was a couple of major custodial funds investing into the Australian market, really, really driving up the volumes. However, in saying that, if there was going on, it'd be very, very hard to see where the selling was come from because the institutional desks certainly weren't involved yesterday either. So volumes were quite low, and that's where all the drivings come into, those yield plays, particularly the banks. And we also saw a relatively good print on energy and materials, despite the fact that yesterday we saw oil off, and we also saw materials in terms of copper and aluminium, also nickel and zinc, all off over in London. So it's been a very, very interesting 24-hour trading period for the ASX.
Yeah, absolutely. Okay, so what do you think for today then?
Yeah, we probably do look like following the US down today, down only around about 13 points. So again, there could be some more big institutional moves going on out there if the spies are only calling that kind of movement. Having a look at something like BHP's off ever so slightly and only down about 10 cents. Now, that again suggests that even with iron ore moving up to 133.1 US dollars a tonne, it could actually go the other way. So despite the fact that we've seen 5 negative prints in the US, that is a very, very small decrease over those 5 days. And at the moment, it just feels the whole market globally is making its own way. And the ASX compared to the US is slightly cheaper, and only ever so slightly. And that's why we may actually see ourselves in the green come 4 o'clock this afternoon.
All right, Evan, thank you so much.
Thanks, Brady.